In today's video, we're bringing back Uncle Raoul and his recent TED Talk style presentation at Sui Basecamp earlier this month, first week of May. And it's a great summary of the everything code and where we're at in the current crypto cycle. So stay tuned.
Picture this. 6 months ago, Bitcoin was $50,000. If you'd deposited then, you could have grown your portfolio by thousands. But waiting? It costs you more every day. Drip2 BTC turns missed opportunities into gains. Buy Bitcoin, deposit it, and watch your wealth grow effortlessly. Vacations, new cars, financial freedom, it starts here. Drip2BTC.com.
Hey guys, welcome back. Drip Coach here with Drip and Farm for Poverty, where we don't trust, we verify, and operate with integrity and transparency. So in today's video, I'm going to be playing a few short clips from Raoul. Again, if you've seen his content before, you've seen me play it, then you should be very familiar. But this is a great clip, or at least the whole 30-minute presentation is actually really good to give you the entire framework condensed. His entire macro thesis, the everything code, is thousands of hours and pages of data. And I think he has like a 3-hour talk on like a more in-depth, and then he's done multiple podcasts and stuff on his own show with others going into different pieces of the framework. And every week he shows different charts concerning that same framework and more of the research that they're doing. But this is just a great entry point for anyone that's not familiar. And again, I haven't seen anyone else tie this together to the macro narrative as well as he has. Everybody else is more concerned with just Bitcoin and Bitcoin going up and fiat debasement, but they haven't explained why. And Raoul wraps it up in a nice bow and tells us why and why it's happening globally, not just to the US.
I'm going to go through some slides that will give you an idea of where we are in the economy and where we are in markets, just to steady everyone's nerves, because all everybody sees is headlines: the world's going to shit, everything's going to die, the world is going to war, all of this stuff. The reality is it something much better? Let's see if I can figure this out. So firstly, I use a framework that I call the everything code. It's something that I spent 35 years building in macro, where I started to realize that the dominant factor in all of macro is actually liquidity and the debasement of currencies. And it explains most price movements in all of the assets that we care about. And I realized it's all to do with debt. And it came from why we're seeing 4-year cycles in crypto and the economy and all of these things is actually driven by the debt refi cycle. The world just reached too much debt back in 2008. And what we've been doing since then is servicing the debt. We've also got some other key factors. This chart is a chart that I produced a few years ago. It's still the single most important chart in macro and explains everything that is going on in our world today. And this is the fact that demographics is everything. And the demographics of the aging populations across the Western world, these are the US numbers using the labor force participation rate, explain the buildup in debt. Why that is as populations get older, economies slow down. To service the existing debt, it requires more debt. To create GDP growth, you need more debt. See, GDP growth is driven by population growth, productivity growth, and debt growth. And debt growth has been the driver, both in the US, in China, in Europe, in the UK, all across the world. All driven by the same dynamic, and that's this aging population thing. It slows down GDP growth and creates unstable economies. And that chart just shows the stunning correlation between debt to GDP and population itself.
So I want to actually kind of show this because I've never pointed this out or never gone in more detail. He has on his channel and all the podcasts. But when you look at it, it just makes perfect sense. So what he's done is he's created this GDP percentage, which is a red line. So that's what amount of in debt the US is in rates of GDP. So back in 2000, we were at, 50% GDP percentage. And then now we're sitting at around 110. So it's gone down, or we've increased our debt over the last 20 years. And then this black line shows the number of people participating in the labor force or are basically employed. And you've seen this go down, right? And then obviously nobody was working during COVID. That's where this sharp decline is. But if you were kind of like chop that off and then plug it in right here, you'd see that we're sitting at around 63%, 62.5% employed. So it's dropped over the last, again, 20 years. And that's going to continue to drop. And that's where his new framework with AI and robotics and stuff come in, because it's like you see that there are being less people being born and you're having more people age out. And then that's exactly why Social Security is basically a Ponzi. You had the baby boomers, especially in the US, there's tons of them, economic boom. They didn't have nearly as many kids as their parents did, which is my grandparents. And then my generation and the generations behind us are not working as much in the traditional labor markets, putting money into Social Security. There's a lot of gig workers, people working overseas, doing your own kind of hustle jobs. So there's like less and less money going into Social Security and being funded into this. So clearly, when you have less people working and the ones that are working are not providing money into that same bucket and more of that money's coming out, you have to, as he said, the number one driver is debt. It's like, well, we got to pay these people somehow. So we just borrow the money. Let's take the money out. And that's exactly what happened. So when you understand that, you're like, oh, that makes perfect sense. And that happened globally everywhere, not just the US. So we're going to skip ahead to his banana zone, where we're at in the current market, because that's all we really care about.
As much like we had in
is like, are we going to get rich this cycle? Is everything broken? Where are we at? Blah, blah, blah. But I wanted to give you that additional or original framework that you can evaluate the rest of this off of, because when you look at that, it makes more sense. And like you said, this started in 2008 with the Lehman Brothers and the banking crisis, where that started to collapse. And that's exactly what's in the Bitcoin white paper, where it's talking about the chancellor doing something over in Europe with the bank rates or something like that. But it was happening globally. So it wasn't just in the US. This is a global phenomenon that everyone is affected with. And that's why he's saying it's the everything code, because all banks have to roll their debt. And there's some 70-80% of the world capital is denominated in dollars, like the debt's denominated in dollars, and like 50% of that's being held by other countries. So dollars are not going anywhere anytime soon, and countries still got to kick the can down the road and, keep their economies going.
We're nowhere near. Our cycle top indicator is a long way away from anywhere. In fact, we're at very subdued levels, much like we had in 2013 before the largest bull run of all time. Now, I'm not guaranteeing that, but I'm just saying, probabilistically speaking, things are very positive going forwards. I see no reason for any fear. Finally, the fabled banana zone chart. The construct is the same. It's not a mystery. It is a repeat of the debt cycle. They are rolling the debts. They are doing the same thing. Each cycle is not to do with a halving cycle, nothing to do with any of that. It's all driven by liquidity cycle and funding of debts. Each phase, we get phase one of the banana zone, banana number one. The corrective zone, banana number two comes. Another correction, banana number three. So this is the banana zone. So that's what happened in 2020, 2021. Off we go. Sorry, that was 2017, which again looks very similar to this one. That was the last one. Here we are now. It can't be clearer to me. I've shown you the macro evidence, the technical evidence, the sentiment evidence. Everything here suggests to me that hold on to your hats. Don't fuck this up. Don't lose control of your tokens. Don't use leverage. Don't get your wallet hacked. Just sit with it. Be careful. Don't get FOMO. Do all of the right things, and we'll go up to the next phase of correction zone. That's going to be harder, because the next one that happens, we'll have a 35% drop, and you'll all say, is it over? And you'll definitely be sure it's over, and everybody on Twitter will tell you it's over, and it won't be over. By our work, we suggest that because of the elongation of the business cycle, because rates were higher for longer, the forward-looking liquidity suggests that, again, probabilistically speaking, without any guarantees, this whole thing goes into Q1, maybe Q2 of 2026, which would align with Trump's, trying to win the midterms as well. So everything's lined up for us. I think it started. So keep the faith. We're nowhere near.
So again, according to Raoul, we are exactly where we're supposed to be, and we are going to see phase 2 of the banana zone coming in here shortly. So it may not seem like it right now, but that is where we are at. But it's hard to digest that, especially with this sideways chop and nothing thrilling. But for me, like I said, once I adopted this framework for the last year, pretty much since started promoting the high yield Bitcoin wallet and Drift to BTC. Been all about BTC and understanding that that's what I want to accumulate most of my assets with. It's like, oh, okay, well, this is great. So I personally am enjoying this sideways consolidation because it just means I can pick up more Bitcoin at cheaper prices. I wish it would have been back here, but this to me is actually great because I'm doing the DCA. So I'll be able to accumulate more the longer we chop sideways. And then again, as long as we don't break the previous cycle all-time high of 67, 68, then that to me says that everything is still on track and exactly as it's performed before. So whenever you have unknown or unusual variabilities come in, variables, that's when uncertainty drives in, because just like we had previously with a new all-time high before the halving, we had never seen that before. It's like, what's happening with this? But you could wrap it around the framework of going, okay, this is institutional capital. This is different than retail. So that was still quote unquote bullish. But if we were to break this trend where we've never had Bitcoin go below the previous cycle all-time high, then that would be very uncertain for me. And I would still keep stacking Bitcoin, but it's just like, damn, how low can we go at that stage? But again, I don't believe that's going to happen. I'm 99.9% certain. So there's a 0.1% chance that that would happen. But I think as long as we get back up above the all-time highs here, then even seeing the 70s that we saw here is going to be potentially off the table. Like he said, you'll see maybe 35, 40% corrections, and those are par for the course. But if BTC gets to a, say, 125,000, which is not a far cry from where we were before, 30% correction only puts it back at 87.5. So even that is a far stretch to get back down to the 70s. Like we would have to see a 40% correction to see that. And then even if we get into the bear cycle next year some time frame, but Bitcoin's over at, let's say, 200K to 250K, you would have to see 70% corrections just to get back down again to these levels of high 80s. So again, as he said, forward indicators, and that's kind of me using my thesis saying, yeah, forward looking ideas in my head are telling me that this is the best asset to dollar cost average into, and it's going to be the one that sustains itself for the longest. And again, if not, worst case scenario, yeah, I'm going down with the ship, like with Saylor and Raoul Pal and Max Kaiser and everyone else who has put up billions of dollars of capital. Like Michael Saylor has bet his entire reputation and company on this. So either this is the biggest grift in human history where you got all these people from different walks of life that don't talk to one another, aren't in the same camps, and they're all just grifting together, and there's some global puppeteer behind the scene, and Bitcoin's a big Ponzi and they're just trying to steal money from all the peasants, then I don't buy it. Like that's the only black swan event that would cause this to be something that we didn't expect. And I think that's impossible at this stage. So I'm hedging my bets with King of Crypto. Let me know what you guys think. Are you familiar with the Everything Code? Do you follow Raoul Pal? I'm sure if you watch me, you've watched plenty of his content, but just curious to see where you guys are at in this part of the cycle. All right, smash that HBO special, help a brother out, like, subscribe, comment down below, and until next time, lift daily and achieve your impossible.